Ladies and gentlemen, holy! I'm in a couple of meetings, and price is flying. What's up, everyone? How are you doing? How are you doing? Welcome, 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 welcome. So, let me quickly close a couple of like stuff that I have going on here. Because, you know, internet. So let me close WhatsApp, and let me close this and that and email and all the good stuff. And of course, open the chat, pop out the chat. Here we go. Welcome. It's been a while since we were live, but hey, I think we have good reason to be live at the moment. So hopefully you are doing very well, and we're gonna have a look at the chart from an Elliott Wave point of view. It just so happened that I actually completely missed the recent move up, like visual miss, not like spot or trading wise, but visually. I had no idea what was going on because I was actually in a meeting with Robert Prechter. What an amazing guy. Like Bob he's so chill, so relaxed, such a friendly person. I love talking to him. I love visiting him earlier this year. Yeah, I mean, now chatting to him again after our meeting in March, and yeah, I mean, love talking to him. Like he's so like it gives grandpa vibes, you know, like it feels very homely, so to speak, or very easy to talk to, very easygoing, very chill. It's very, very nice. So I had a great chat with Robert. Of course, everyone. Oh, my webcam, lol. I'm like talking with my hands, no one can see me. But yeah, of course, I mean, most people will know his book, right? I always recommend this book, you know, in all the streams and stuff, Elliott Wave Principle, right? So yeah, got the signed. Gotta show this. I'm proud of this. Yeah, may you always ride. May you always ride the perfect wave. Oh yeah, that's right. So yeah, what we're gonna do is analyze the chart, chat, chill, and have a look till my wife and her sister eventually come back and we go for dinner. So don't exactly know what the plans are, but you know, they're out and about shopping, so you know how that goes. Welcome everyone. Sammy Boy, Rahul, Boys 2 Men Sounds, Sub-Zero. You changed your name. What's up? Welcome, man. Good to have you here. No Joke, VE, Dimitri. Welcome everyone. I actually wonder if chat is working. 1 second here. Let me quickly get the chat back. Do this, do that. Okay, there we go. Let me just put this right here. So welcome, guys. Credible Sub-Zero, John, Dimitri, Christian, Dario. Welcome, Baby Will, King of Hearts. Thanks for smashing the likes, guys. Mallorca, Spain. Very, very nice. I miss all the good longs for the last 3-4 months. Look, there's always going to be a next opportunity. You know, the FOMO and those type of emotions. Also, when prices is pushing, you got to stick to your plan. If you have a plan that is data-driven, you know it works for you, right? It's been tested. It's no problem to miss moves because there will always be a next move that is actually according to your plan, right? So don't be too influenced by the movement of price, potential FOMO in the markets, and emotion, and you know, all of those things, because at some point your plan comes back and you'll just execute your plan. You know? So it's and it's something I recommended in a older live or previous live stream. I don't know exactly which one, but that's what I do. So this here, what you see now, is my YouTube window, I suppose. It's my, you know, where I share my analysis, but I also have a more trading environment where all the candles are gray. I do not have price here. So I don't have any price on the right side. I also don't have the dates. it's empty. So there's no numbers, because for most of you and your plans and strategy, the price of an asset or Bitcoin or crypto or commodity or whatever, right, stocks, right, the price of an asset, it's not important for most people, right? You don't need to know the price in order to execute on your plan. I think not seeing the price, I actually got a message from someone in Discord the other day. Not seeing the price might actually help a lot with your emotion, because you're not thinking, oh, Bitcoin is at 100K. Bitcoin, like is doing this. We're now at 123. And so, it might help. Who knows? But if you miss out on certain moves, most important thing is just don't care about it, right? There's always going to be another move. I had a plan earlier today. So, and I actually shared this in Elite. So earlier today, what I wanted to see is I would have loved to see price move to the daily naked point of control here, or for price to move to this range point of control, this level here. And if price was going to go down there, that was going to be my entry for another move towards the upside. And then I was looking for this resistance, and then you just observe, right? Look back to the previous video that I posted of 30 minutes, where I said the moment price is moving, right? And that was over here. The moment your directional bias plays out, you have to follow up with price and see what it does, because by following up with price, checking the volume and the structure, you will be able to figure out if you potentially get stronger continuation to the upside. Now, earlier today in Elite, because I do realize I didn't make a video, because according to my video yesterday, right, we were still looking for a couple wave 4s and wave 5s at least. And yeah, sure, a retracement before taking out all-time high, which hasn't yet happened, would be nice instead of just straight continuation. So I keep it in the back of my mind, but we're going to observe the waves in a second. But with regards to this range, I wrote in Elite earlier today that the probabilities are highest that this structure is corrective, increasing probabilities for price to take out the high. So that is something that I posted only in Discord and Telegram, that is, because those are the places for Elite. And of course, it wasn't on YouTube. I do realize that. But the reason why the probabilities were higher that this move down was a corrective structure, and therefore you're looking for continuation up, would have been nice to get a larger range, but you're looking for continuation up, is because of the subwaves. You cannot count this move down as a high probability motive wave, right? And we are, of course, in a 1 hour uptrend. So every time you get a new range, which is a higher probability corrective structure, you're looking for continuation. So here, when you see this move to the downside and on pretty, like I can open the volume here. So you can see in this move down, the little peak here at the bottom, and then price reversed, took out this high. That's important. You only have to think, okay, can I potentially count a motive wave to the downside here? Can this be a diagonal? Can this be an impulse? Is this maybe a multi 1-2? Well, let's have a look, shall we? I mean, you know the conclusion, but this was my process of thinking. So this is more education, I suppose, again. But this is what I was looking at earlier today before sharing it in Discord, Telegram. Is this corrective or not? The probabilities are higher, it's corrective. Why? An impulse to the downside doesn't work. There's too much overlap, and in an impulse, wave 1 and 4 not allowed to overlap. Can this be a multi 1-2? No, 1-2-1-2. You eventually want to see a wave 3 down. You don't want to change the structure here. Doesn't work. And this low cannot be a wave B or a wave X when you count this as an A, B, or a C. Main reason for this is that price went below the 1.618. And the 1.618 Fibonacci, I mean, it's not an invalidation, but it does really reduce probabilities that whatever this move is, it's not a B, it's not an X. It's likely something separate, right? So you're looking here for a WXY or an ABC to the downside, but you're not looking at this structure here as a ABC or WXY. It's too low. So multi 1-2, no. Impulse, no. Okay, then we get to a diagonal. Well, in a diagonal, We prefer contracting diagonals, by far more common than expanding structures, and even a contracting leading diagonal, because if this was a diagonal, it's leading because it would start something new. This would be then a wave A or a wave 1. But a leading diagonal is not a common structure. It's not a common structure. So that's already something you got to keep in mind when considering a diagonal here. You got to be like, well, probabilities are higher. It's corrective, whatever it is, instead of a diagonal. We'll always have higher probabilities. But even trying to count a diagonal here to the downside doesn't actually work. Because thank you, Harish, for subscribing. Welcome, mate. So when you consider a diagonal to the downside here, what's the count, right? Is this 1, 2, 3, 4, 5? But then your wave 5 here is longer than your 3. And that's not allowed in a contracting diagonal. So it doesn't work. If I take a channel from the low of 1 to the low of 3 to the high of 2, you can also see wave 4 move beyond this trend line. That's not allowed in a contracting diagonal. An expanding diagonal is very, very rare. It doesn't make sense to look at expanding structures. So I don't even know if an expanding diagonal really works, but by all means, it's low probabilities anyway, an expanding diagonal. So therefore, not looking at an expanding diagonal here. So yeah, probabilities were higher. This is corrective. And we were looking for price to therefore take out this high. So this is basically the summary of what I've posted earlier today. Also, every morning, this is something new. I have not even announced this officially. So you guys here are the first one to hear it. But every morning, nowadays, I actually make a video on my routine. I've been doing it for the past couple of days, and it's many people enjoy it. And what I do in such a video is I talk about, or not really talk about, this is my routine in the morning. It's the morning routine channel as well. So what you usually see, of course, is the finished product. I have my video, my scenarios, I put it online, talk about it, we're done. But in the morning routine videos, I explain more about like, what am I looking for? Because I'm basically doing my routine. What are the new levels, time frame, and volume levels? Are the scenarios updated? Do I need to change stuff? And I do it all live while recording that video. I show what I'm changing, why I'm changing, and I'm explaining more. And in that video, I also spoke a bit about this structure and the fact it looks more corrective. And that was all the way in the morning. So yeah, you know, that's how you can analyze that piece of price action. Now, of course, we are very close to all-time highs. Am I going to keep it on the chart? Yes, I'll remove this level here. I remove this one. I'll keep the volume levels on the chart for now. So let's focus on the local structure. Okay, now we're starting with analysis. Oh, wait. Let me have a quick look here at the chat. Many peeps, right? Welcome, everyone. GTP Sleeper, what's up? Final retracement. Don't FOMO into something. I'm not a financial advisor. Everyone does what he or she wants to do, but the recommendation is to not FOMO at the, maybe it continues and you're going to be very happy and maybe you snipe the exact top and price is dropping. People that just bought here minutes ago are in a little bit of trouble. So again, stick to your plan. Know what you're looking for. If it's not coming, it's not coming, and you just wait. You might wait a week, you might wait a couple of days, you might wait a month for your setup. If your setup is not on the chart, do not execute based on FOMO, feeling, like emotion, what other people are saying. Follow your stuff, right? That's most important. Bonjour, the ride with Roland. How you doing, Baris? Welcome, Chris. We joined Nuke right back. There's always going to be another range after a pump and a dump. There's always going to be another range. Albert, NP, Milo, what's up? What's up, Gunham? Do you always wait for a high to be taken before you can decide if it's corrective? No. I already knew this was corrective, this move, before the high was taken. Because so the only oh, you mean this high? This one here. No, I don't need this high to be taken to increase probabilities. This is corrective. What's up, Dutchy, man? Mark, how you doing? The moment price here moves towards the upside and you're touching here the 886 taken from this high to the low, you're already like, okay, a multi-1-2, low probabilities. You touch the 886 diagonal, low probabilities. An impulse doesn't work. So, that's the moment where you're really like, okay, it's very much corrective. And you got to wait for your setup. So, Yatin, welcome. Would be nice if we could see a correction to the 05. Let the late longest get wrecked. Open interest went parabolic today. Yeah, I mean, that's why you want to watch out. It's the same at the lows, right? It's the same at lows. We're going to get to the Elliott Wave analysis, of course. But when price is moving down, for example, here, it's a good example, right? How many people do you think are selling at exactly this low? Right, look how price is moving down. You got your move down, sideways range, and you can see this acceleration almost in how steep price is moving. And then you get this big candle to the downside. You can imagine there's some people that are sniping that low, shorting, not sniping, longing. And that's not, of course, what we want. Think about 49K. 49K low, right? This one here. I mean, 100%. Some people got that low with their short positions, expecting lower, and then price reverses. But that's the thing, like it's patience. It's patience, right? And patience is very difficult in trading. When you see price moving, I can imagine most people, I mean, of course, we have a community, and I'm in the market for a little while now. So, many people will feel that emotion. They feel like, oh shit, other people are making money and I am not. Or price is moving to all-time highs. I better join and make sure that I grab a little bit of this move. And it's completely out of their plan. And they follow crypto Twitter and influencers that are shouting to their camera, talking about crazy stuff and, 200K next and all that stuff. And then you find yourself over here buying while now price is at 122.9K. So if you're not part of the move, then just wait. Wait for your plan. And if you don't have a plan, don't trade at all. If you do not have your personal trading plan, avoid trading in the markets or with $1 trades, but don't put money on the line. That it's not worth it. It's not worth it. So my setup today, I'll happily explain the setup that I was looking for. Try the new team. Not yet. I saw the maps though online. Virtual and spam drove it. Okay. So what I was looking today, my setup that I had actually for this day, which was my plan, which did not come to fruition. So I did not take a new long in this range. Probabilities were higher to move up, yes, but I did not take a trade to long in this range because it's not my plan. Probabilities were higher. This is corrective. My plan says I want a retracement to a level of support. I want one of my levels to be hit in this case, in this particular scenario. I want price to move to one of my supports. If it would have, I would have taken. I mean, I even had a limit order here at 119.215, but it didn't. And now price moves up. I don't care. I just wait for a new opportunity. Well, I don't need to trade every move. Also, I had a good reason to not even see this move to the upside because I was in a meeting with Robert Prechter. And we were having a meeting for like an hour, 40 minutes. 40 minutes on Zoom and then a little bit on the phone as well afterwards. There was good reason for me to not have my eyes on the chart. So it was a good meeting. I love talking with Robert Prechter. He's such an amazing guy, such an amazing person. Yeah, and always love meeting him in March. Loved talking to him earlier. So zoom out, remove this, clean the chart a bit, and talk Elliott waves, shall we? It's not possible to pre-order the book. First, I don't actually really know how it works. Second, we probably just publish it. We do a big announcement and everyone will be prepared on when the announcement is and when everything goes live. So the compendium will then be live on Amazon in ebook, paperback, and hardcover. And then we also have the very limited edition bundles, and we are planning 3 bundles at the moment, at least. Might become 2. But bundle 1 is 100 pieces, bundle 2 is 50, bundle 3 is 15. And it's really sick. It's really, really sick, but I can't say much about it. Okay, let's get this started. First of all, go to the weekly time frame. I realize I haven't been on the weekly for a short while. Let me move my weekly time frame scenario, which is this one. He didn't have a Zoom meeting with the Pope. I know. It's incredible. But he's such an amazing person. I love talking to him. And I said earlier, it's a little bit like grandpa vibes. Like he's very easy to talk to. We have a great synergy. Like it's fun. We talk a bit about what happened in the past year and some like like just chit-chatting in the beginning before we started to talk more about other Elliott Wave related stuff. And he's a great example of what I like. He has done so much for Elliott Waves. Nelson Elliott, he's the founder of Elliott Waves, right? The guy that got to the idea of Elliott Waves. Robert Prechter, for me, he's on the same level. He is the one that popularized Elliott Waves. Without Robert Prechter, I wouldn't be an Elliott Wave analyst, and most of you probably would not be Elliott Wave analysts if it was not for Robert Prechter, who is the author of the book that most of you will know, Elliott Wave Principle. So meeting him in March was a dream come true. Having the opportunity to shake his hand, talk to him, have dinner with him. And now we chat sometimes, on phone, WhatsApp, iMessage. And it was great speaking to him again today. After March, now October, we spoke to one another again. And it's still crazy to think that he takes time out of his day to have a chat, and more about that will come later. So weekly time frame, let's start. On the weekly time frame, this is my currently preferred scenario. So here we're looking for a multi 1-2 in the beginning. So a couple of 1-2s, we get the 3, couple of 4-5s, and then after wave 5, that is when the bear market starts. A bull market will never just continue. At some point, a bear market will begin. Price never only goes up, it never only goes down. So don't be married to one direction. Always make sure you're open to other scenarios. But just like on the lower time frames, which I explained in my previous video, as price eventually moves, right? When it does, once it eventually moves up, you just follow along, follow the waves. The waves will give us more information, and we'll see if we're working on a 5. Do we get an extended 5 for maybe even higher prices, right? Or do we get a normal looking 5? I'll get to targets in a second, and then we look for the bear market to begin. That's stuff that we can get to more accurately once the information is there, but I do have analysis on those type of targets. This is currently the preferred scenario. So here we would then be working on another 4 and look for a 5 towards the upside. Now, of course, this wave 4 can be finished here if price continues. Just make sure you also realize wave 4 might not yet be finished. Price is moving to the upside quite impulsively at the moment, yes. But as long as price is not moving significantly out of this range, there's always the potential for flats A, B, C, or W, X, Y. Again, you always need a bearish scenario besides a bullish scenario. The probabilities are highest to take out this high, but that is something we've been talking about for weeks now, that the probabilities are, months, when looking at the weekly candles here. So probabilities are highest to take out this high. Right? We know that. We've been talking about it a lot. But locally, we still, of course, have bearish, quote-unquote, bearish scenarios as well that continue the range. And then at a later stage, you move up. We'll cover that in a second. No? So this is something I'm looking for on the weekly. Why do I have this particular count on my chart? Well, if we compare this structure since 15K to the upside to where we are now with the previous bull markets, this quite simply makes most sense. So on my YouTube channel, here, I have a video that I recommend because I don't want to go in too much depth. This video, Bitcoin cycle and macro playlist, this latest video, check that one out. I compare the previous bull markets with the current one, and you'll get a good idea of why I'm looking for this particular count. Now, if I open my, let me actually change this. So if I open this folder, you can see the basic structure of a bull market 3 times, basically in a nutshell, which is another reason why I like to count the weekly time frame the way I do. So in previous bull markets, here, 2016, you can see that price moved up and there's a lot of overlap between the ranges, till eventually you get a gap. And then after the gap, which is in Elliott Wave terminology, your wave 3, you get a couple of wave 4s and 5s, then you get that final push to the upside, your final 5, then the bear market starts. Okay? Same happened in this bull market. I only put the structure on this piece here, but I could include this and this as well, because in the end, I count this as 1, 2, 3, 4, 5. But inside the 3, you can see the same structure. Overlap, those are your 1, 2s. Gap, that's your 3. Acceleration, volume increasing. Couple of 4, 5s. And then eventually you turn around. Okay. This is, by the way, Elliott Wave simplified, or known on the channel as K-Waves. It's just incredibly simplified, like Elliott Wave Theory, which therefore we give it another name. And K-Waves is basically Kuhn's waves. It's just how we call it. So here we have, again, overlap. We get acceleration, sharp move up, increasing volume, and this is where you once again start moving sideways, right? Price slowly, you get the idea. So this is the gap, overlap here, and now we're in this phase. So you can see compared to the previous bull markets where we are in the bigger scheme of things when we compare it, at least, right? When price doesn't rhyme, or sorry, it doesn't repeat, but it can rhyme. And based on the previous structures and the one that we have at the moment, it just makes sense from an Elliott Wave point of view to label this as your 1, 2s, that's your 3, this is your 4s, 5s. Of course, your wave 4s and 5s can go to higher prices, but at some point, you're going to turn around. And basically what we're saying here is we're in the final stages. Final stages might still be weeks, months, till price turns around. Targets. 1 second, let me show you targets. Where is it? Let me find my text. Was it this one? Yeah. So look, I really recommend that high time frame video that I did over here to get the whole story. But in a nutshell, this is the conclusion of that video. So my very old analysis that I did back in the day on the higher time frames, or even when price was down here, we were talking about 100K. I actually have a video on it's a short on my channel, where my editor actually found the short based on a question in YouTube. He went all the way back and he found it and he posted it again. And now price is, of course, above 100. So we were looking for 100 plus. But here, old analysis, 81 to 176, where at least 100K was the goal. Current analysis, which was a month ago with the previous high time frame video, which still stands. So when we look at all the information, the main first target area is 125 to 145K, or you could basically say 130 to 150 to just use round numbers. And the second main target area is 170 to 220. Anything beyond a 220 is low probabilities at the moment. Probabilities are highest. You're looking to end the bull market in one of these two zones. Now, we'll figure out which one by observing how price moves towards the upside. No? But 125, 145, basically 130, 150, and 170 to 220. So when we then go back to my scenario, that is what we're looking for with this wave 5. Now for this wave 5, I can use some fibs and stuff to get your typical Elliott wave target. So I can take a Fibonacci trend-based fib extension from the start of one, end of one, and to the current low that I use for wave 4. Right? You got to be aware there's always a scenario that continues the range. Okay, so that is a 1 second here. Let me just do my thingy. Ooh. Where is it? There we go. I'll have to check the log and non-log targets as well. Wait. So on a linear scale, your target area would be, I mean, the 1-to-1 is already passed, but then you're basically talking again about 130 to 174. So let me remove the 382 here. So this is on the linear scale. Just be aware that if you analyze very high time frames on a logarithmic scale and you use fibs on log as well, your targets can go very, very high and sometimes unrealistically high where you're going into millions, right? So always check both when you do these things. But basically your area would be here, the 618 as a max at 174, and then here you have your 130. Right? So it's basically the same as the conclusion I've shown just now. On a logarithmic chart, you can immediately see things are jumping with the 618 at almost 400K, which is, honestly, it's not something I'm at the moment looking for. There's no signs on the chart that would basically say a movement going that high is on. If it does, then all of us we're going to be very happy, no? But if we just purely look at the analysis and the chart, 400K is very, very extended. It's not high probabilities. And the 1-to-1 here is at 175, and these two, again, 130-ish. So, you know, that's your area, I suppose. Wait, I clicked on something. There we go. Go back. So that's the weekly. Very nice. So then we go to the daily time frame. I will go to the 4 hour in a second, but on the daily time frame, as price here moved towards the, let me go to the 4 hour anyway, as price moved to the downside, and we touched 107, which was the first of the 3 levels that we kept an eye on, 107.7, 105.96. As long as price, and this, let me make this very clear, as long as price is not moving to 136.6K, these levels are important. Because as long as price is still inside this area, you can work on a larger range. Flats, ABC, or WXY. You got to be aware of those scenarios to get a longer sideways range in your larger weekly time frame wave 4. But yeah, as per many videos, if you go back weeks over a month, then you will see the probabilities are highest. This is corrective. Probabilities highest. We're looking for price to take out the all-time high sooner or later. So feel free to go back in history to see me repeating that almost every video. We're very close now, right? Of course, price hasn't actually taken out the all-time high, but we're close. Then we get to the scenarios. I'm actually going to double check if I updated. Let me go off log here. Okay, let me start. I'm going to do some live analysis because I just want to make sure that stuff is correct. Oh, wait, let me explain why I'm deleting this. Price touched the 1.618, so a flat ABC in a wave Y doesn't, it's low probabilities. So therefore, we're not looking for a flat in a B here, or an ABC down in a wave Y, okay? Which therefore means you cannot, in a bearish scenario, end wave X here. Wave X needs to end here. Which then also means, and this goes very quick, but of course, time is ticking, and I just want to make sure you guys have the information. Let's put this online as well. and then do this, and then do this, and then do that, and then do whoop, and then up. Okay, there we go. And then we remove this, and then we do that, and then we do that. And then we take a new one to make sure we adjust it to the new pivots. You take a trend-based fib extension from the start of W, end of X, or start of A, end of B. So in the end, it's the same pool. If price would continue up here, you're gonna, of course, use the new pivot for a bearish scenario, right? This is the bearish. Yes, do we have a bullish one? Of course, we also have the bullish one. But I'm just updating my chart here with the newest information so you can see how I quickly do this. Very nice. Now, wave B or X is most commonly a zigzag family structure. So either a simple A, B, C, which is a 5-3-5 movement. It can also be a WXY, which is not really something I'm looking for. I'm looking for an ABC. Even a WXY-XZ, theoretically possible, but those are very rare structures. Doesn't really make sense to count WXY-XZ. So an ABC here would make most sense. And then an impulse, 1 2s, 3 4 5s, ABC down, and then you get another impulse to the upside. Now this impulse to the upside here should then be a wave C with internally a 5-wave structure, right? So you want a wave 1, 2, I mean, what are we gonna do? This is the highest amount of volume is here. So we are actually moving up on lower volume at the moment on the 4-hour chart. Interesting. What's the 1 hour? 1 hour is higher, but the 4 hour is lower. So we'll see how that plays out as the weekend is approaching as well. But I have a 1 hour count coming for you guys. So on the 4-hour time frame, you're basically looking for a rejection in this area, 122.8, 131.1. If price, and there we go again, if price moves above the 1.618, 135.2, I think I had my lock check. Yeah, 135.2. That's the moment you're not looking at a B or an X anymore for sure. Okay. Now, what we want to see for this at least is this turns into a finished 5-wave structure, get a retracement, and this retracement is going to be a Y or a C. Now, this price action still, even though price is moving up here, it does mimic what I'm still looking for, preferably in a bullish scenario, instead of the straight continuation and just boom. And, you know, again, I'd be very happy if price just goes up. You know, I don't mind. I think most of the people don't mind. But we have to be aware that if this is going to turn into a wave 3, meaning in a bullish scenario, you want to move off 107. That's your wave 1. This is your wave 2 in the bullish case. If you're working on a wave 3 here, you really want price to extend, right? Now, what does that mean? Now, we take a trend-based fib extension from the start to the end of 1 to the end of 2. And you at least want to touch 125.8, right? Like the 1.618. Minimum target for a wave 3. Minimum target. Wave 3 and an impulse is not allowed to be the shortest wave. So basically, you want wave 3 to be longer than wave 1 or longer than wave 5. Now, in this case, it's longer than wave 1. It passed the 1-to-1 here. So cool. But you also need to consider that if this would be an impulse in a 1, 2, we still 3, 4, 5, you need room for wave 4. And wave 4 is not allowed to overlap with wave 1. And if this is your high here for a 3, which at the moment is not extended, as we like to see, at least the 1.618 is common for a wave 3. So if you would form a range now in a wave 4, you got to be aware that it does not touch this high at 118. Otherwise, it's perfectly fine. You just don't want to touch this high. But preferably, if we are really looking for an impulse, you touch at least the 1.618 at 125.8, which is common for a wave 3. And the wave 3 can easily extend further than the 1.618. On a weekly time frame, I don't know if I have the detailed count here. Is this the detailed one? No, I don't have the fibs here. See if I have my detailed one here. Yeah, okay, here we go. on a weekly time frame. So this is the same scenario on the weekly that I showed earlier, but now you can see a lot more stuff going on. So here you can see this wave 3 went to the 4.236. This one to the 3.236, and then you can barely see it because of my fib here. This one then went to the 3.786. So wave 3s can easily extend to much higher targets than the 1.618, but commonly a wave 3 extends, and we usually want to see the 1.618 touch, which currently is at 125 and a little bit here on the non-doc. There we go, 125.8 minimum. Okay. Okay. So the moment price is moving up, touches this level, we have to be aware of an impulse in a 1, 2, 3, get a 4, and then a wave 5 towards the upside. If price passes the 1.618, that's better for the bulls. Reason being that this level is still a target for a potential C in the bearish scenario. Right? So you always need a bullish and a bearish scenario because it's important for trade management. No? Because you can imagine if price goes up, everyone's happy, but price will not always go up. So in case you would, imagine we move up to the 1.618 and price is rejecting here, you got to be aware that, okay, we might still get a C and then continue a larger ranging structure instead of a short range and continuation up. Now, trading wise, how would I approach it? Well, if I am in a long, wherever on the chart, doesn't matter, right? And I'm still in my little position here. I mean, it does depend a bit on the time frame on how you manage things. So imagine it's a 4-hour time frame trade and you entered, let's say, somewhere over here. Your invalidation is the low. Price is now there. I'm not a financial advisor. This is just my personal approach. Now, as price is moving to the upside here, I do realize that from an Elliott Wave trading point of view, the probabilities here at the moment are higher. I'm looking for wave 4s and 5s on the lower time frame. So we have price moving up, sure. We have volume kicking in as well. No. But I know that a 1.618 is coming. We touched the 886, taken from the all-time high to this low. The 886 very often is not broken in one go. Commonly, the 886 will provide at least a bit of resistance and a little bit of a rejection instead of just being pushed and you don't see it. I have great examples for you. Just to quickly explain my point here, let me go to updates, and then here we go. This is the 886 on the chart at the moment. Right? But here are examples. 886 taken from this high to the low, touch, retracement, continuation. Touched, retracement, continuation. Touched, retracement, continuation. You get the idea. Touched, right? It's always taken here in an uptrend from the high to the low. Touched, retracement, later continuation. Touched, I don't have to say it. Let me just click through it because everything is the same here. And both of these here. So, oh, here. And this is the range from 43 or 73 to 49. So the 886 is important with regards to Elliott Wave probabilities. I mean, in the end, we're looking for price to take out the all-time high, but also we're aware that the 886 tends to be an area of resistance before taking out the all-time high or looking for a continuation of the trend. And a rejection of the 886 can go shallow and continuation, can go deeper, can even take the low. But that's, of course, not Elliott Waves. That's just purely 886 theory here. The Kate principle, as we like to call it. So it's Kuhn's 886 principle. We just have to give stuff names for people to recognize these little things. So this is something that I found myself years ago. And the 886 is very interesting. So naturally, I'm like, cool. If I am trading, I'm at least looking for some TPs reaching areas of resistance. Maybe even closing. If I'm happy with my risk-reward ratio, perfectly fine. No? Depending on where your entry is, stop loss, all that good stuff. Because I also realize price will eventually create another range. And I will be able to analyze that range. And if the probabilities are higher, this is corrective, I'm looking to just enter again and look for continuation. If I would exit my trade and price continues, who cares? I followed my plan. I don't mind missing out. I wait for a new range to form. Based on that new range, I will create a new plan. If I'm happy with the profits, the risk to reward, and I stuck to my plan, That's most important. So by all means, this move up still has very much wave C potential. And a wave C would be important for this scenario. W, X, Y, A, B, C. Target area of resistance. Move to 135, you're safe. Move beyond 131, you're doing very well, right? Bulls are definitely in control. For a bullish scenario, what we would prefer, or what I would prefer to see if I really look for a larger move up, is one of two things. Let me remove this here. So for the bulls, let me just keep this on the chart, but label it manually. For the bulls, I'm looking for one of two things. Number one, wave 1, wave 2, wave 3, wave 4, wave 5. Wherever wave 3 eventually stops, you just got to wait for the range. Wave 4 is commonly similar in size compared to wave 2 in time. Wave 4 generally is a shallow movement. Wave 2 is deep. Wave 4 tends to be shallow. So you're looking for a range that is similar in size in time, at least compared to wave 2, commonly, or longer. Which means wait for a range to form that will give a new opportunity. Look for another move up in 5 if this range is proven corrective, which we will be able to analyze here on the channel. So this is bullish structure number 1. Now after 5 waves, you're looking for a retracement. And we will see if this wave 5 is the end of the bull market, or if this wave 5 is just another like higher degree 1, 3, we'll see. And if the move to the downside is a corrective structure, like for example a double zigzag, oh, we're looking for continuation. Price moves up, cool, we're looking for longs, on we go. No? This is also again how I like to, I just try to educate a bit more on trading. I often get questions. So price is moving up. Once I'm happy with my trade, I can enter, can take, or exit, can take profits. Once there's a new range, observe the range. If corrective, look for new entries, look for continuation. Get continuation up, wait for an impulse. 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5s. Once we're moving into 4, 5s, I like to exit my positions because I'm expecting a range or retracement. If wave 5 would finish here, wait for the retracement. If the range is higher probability corrective, which preferably happens after a 3-wave down, take out the high. Look for areas of support, entries, look for price to continue, take out the high, follow along. Over and over and over again. So this would be scenario 1 for the bulls. So after 5, retracement, maybe continuation, maybe not, we'll see. Second option for the bulls is 1, 2, 1, 2 continuation. Second wave 1 here. 886 would be quite nice, actually, to finish the 1, because people are definitely FOMO longing. So it provides the liquidity. I think something I explained in my previous video, I said, what I would prefer to see, if you watch my video, you'll recognize this. What I would prefer to see from a psychology point of view is price moving up, not take out the high, but get quite close. Who remembers this from the video? And then move down. Because the FOMO buyers are going to provide the liquidity here, right, to get absorbed, drag price down, get some of the stop losses and liquidations, which is then again going to get the liquidity for continuation up. So a second wave 1, second wave 2, continue, which basically means impulse up, 5 waves, 3 waves down. We need to be patient with this move here. Wait for a 3 wave, look for continuation. We will observe this, as we always do. So those are the 2 bullish options. You either get a 5 wave up or a double 1, 2. 1, 2, 1, 2 continuation, 1, 2, working on 3, 4, 5. Another important thing is the weekend is coming. Generally, during the weekend, price is ranging, not creating motive wave structures and impulsing. So with the weekend coming, probabilities would be on the side for a ranging structure. If you go to the chart and you go back through all the weekends, you'll see that statistically, the weekend has a very high probability of being a sideways range. And of course, a range can have deviations, but generally, you create that range. Sundays tend to be more volatile than the Saturdays. The Saturdays tend to be very ranging structures, while Sundays can be the start of new moves, which actually, now I think of it, I think that happened Tuesday, Monday, where is it? Sunday, yeah, that was the start here. On Sunday, this move to the upside started. So this was your Saturday. Nice little example here. So here you have your, let's see, this is your Saturday. And then this is where the end of your Sunday, right? So the end of your Sunday then kick-started the move to the upside. So Saturday, typically very ranging. Sunday can have some volatility, but in general, a weekend tends to be a low volatility structure. So that is something we also want to keep in mind with regards to bullish scenarios, looking for wave threes. If I would have a preference, I would prefer a double 1-2 for the bulls. 1-2, 1-2 up. Fake a potential break, go to the downside, maybe a deep retracement, and then continue. But yeah. What's not too neat though for a double 1-2, and regular viewers here will know, is that this structure is now quite a bit longer than this one in price. So if we take a fib, trend-based fib from the start to the end, toggle on the 1-to-1. When considering a multi 1-2, right, a multi 1-2, preferably your highest degree 1-2, these ones, are a little bit larger in price and time. It's just Elliott Wave degrees. Now, a lower degree, wave 1 and 2, can mimic the size. It can be quite similar, but you don't want a second lower degree wave 1 or lower degree wave 2 to be significantly longer in price or time, because it reduces the probabilities of it being a multi 1-2. So the fact that price here moved to the upside beyond the 1-to-1 by quite a stretch now, is a multi 1-2 then the highest probability. I would prefer just not to take the all-time high, really, but we might. Or we swing it, like I said in my previous video. Maybe you take the liquidity and then a retracement. But 1, 2, 3, 4, 5 is on, or 1-2, 1-2 for the bulls. The bears, ABC. And it is quite classic for ABCs to get a high volume wave C. It's either the FOMO wave C, or if price is moving down in a sharp wave C, people, of course, get very scared and fearful. So you have a slower wave A, you get your B, and then you get a sharp wave C. Aware. Which then brings us back to this scenario. So I just want, I'm always very neutral. I don't care if price moves up or down, because I just trade my plan and be happy. I'm not married to Bitcoin. I don't care what the price of Bitcoin is. I just trade Bitcoin. And I analyze Bitcoin because I love Elliott waves. And we are currently at a important area on the chart where we have to be aware of the resistances. So at least trade management is vital, I suppose. Now, with regards then to a wave C potential, or what is this? Oh no, wait, this one doesn't. So we're looking for the impulse now. Where is it? Here we go. So yeah, we need either a multi 1-2 here, or we have 1-2, 1-2, 3, 4, 5, 4, 5. Maybe then take out the all-time high. This would be an impulse. So this can be your C, can be a second wave 1, can be a wave 3. It just depends how high the move goes. I think like the conclusion of the story is more like, don't FOMO into such moves, because there's still very much retracement potential. Also, don't be thinking like, oh, price has to go to 105, 109, 110 and all that stuff. Just focus on the waves. In the end, probabilities are highest to take out that all-time high, which we've been talking about for such a long period of time now. So it's nice to get close, but I'm very aware of the scenarios where you continue the range, or you have a 1 2 1 2, where you still get a retracement. 1 2 3 4 5. After 5, retracement, maybe continuation. You get the idea. So just want to manage everyone's emotions in a way. It's nice, price is moving up. Portfolio is doing very well. But do not get blinded by these moves. Be so happy in your emotion that you forget to reward yourself. Even though price can continue, you don't need to snipe the low and snipe the high. Buy the low, exit at the high. It's not the point. You don't need to snipe the exact low to share a P&L photo online just for people to basically clap their hands and give you an ego boost. You don't need that. You're good enough. Focus on yourself and your plan. Fuck the rest. Execute. If your plan says TP, TP. Right? So stick to your plan. If your plan says do not, then do not. Okay. If it's a 1 2 1 2, then you want to see the waves overlap. It's not a must, but it's preferred. So with a multi 1 2, I like to see this. It's textbook. So this is a multi 1 2. Potentially here, right, you had your wave Y triangle, but then this is still a multi 1 2. So multi 1 2s are often mistaken for diagonals. I actually spoke with Prechter about it earlier today when I was in a meeting with Robert Prechter. So we were talking about different structures, Elliott Wave structures, and we were talking about multi 1 2. And is a multi 1 2 an official structure, or is it just another pattern? And so I'm of the opinion that a multi 1 2 is not an official structure, but it is a pattern in the Elliott Wave realm. And can be recognized. And he himself agrees with that statement as well. He even says that not like saying it's not an official pattern might actually go a little bit too far. He says maybe it's more like it is a pattern, but it's not like the classic stuff, but it's something we do see on the chart. And in his book as well, right, he also writes about a leading diagonal has low probabilities and is often mistaken for a leading diagonal, lower probabilities. It's more common to have a nested 1 2, a multi 1 2. So multi 1 2s are more common than leading diagonals, which also therefore states that a multi 1 2 tends to recreate the form, the pattern of a diagonal. But it does not need to do that, but it is most common for it to do so. One of the waves to the upside where we did not see a multi 1 2 that overlapped was this one. So this one, to my quite recent knowledge, I suppose, this is 2024. This is a clear example on the 4-hour daily time frame where you have your 1 2 1 2, you get your 3 4 5 4 final 5. So here you do not have the overlap between the 1 2s. But if you go back in history, right, here's your multi 1 2 overlap, right? We can go back even further. Here is again multi 1 2. This is also a 1 2. But then here you again get your 1 2s, right? This area here. And you'll be able to spot these many times. Also here. Multi 1 2 in here. You can even see the two retracements, I suppose. So yeah, you preferably do have overlap between the 1 2s, tend to be mistaken for a diagonal if it does create that form, but then probabilities are higher, you're looking at a multi 1 2. So therefore, like, your question is related, of course, also to what's happening here. I don't really enjoy counting this structure to the upside at the moment as whatever 1-2 here, and this is another 1-2. I don't really like to count 1-2, 1-2. Honestly, I can't even count this whole range as a single 1-2 really. And I do realize, I think it was Binance. Binance actually has this as the low. On my chart, this is the low. So, there's a bit of an offset there. But still, I think this is a 1-2, 1-2, and then a 3. At the moment, it just doesn't really feel good because the 1-2s are so far away from one another. Plus, look at this wave 1 compared to the one wherever the one here is. It's really off. It's so much longer in price, like so much longer in price. It doesn't make sense to me at this moment in time. So that's why I prefer to count it like this, or at least something like this. So we have 1-2s in the range, but then as price moves out of the range, we're in 4-5 territory. We get to 3, but then you get the 4s and the 5s. So the 5s of a lower degree are extended in that case. Now the question becomes, could this be a 4 and could you now get your 5? Once 5 is finished, lower time frames, 1, 2, 3, 4, maybe you take the all-time high, get 5, swing the high, take the liquidity and then go down. Could that be your 5? Or are you looking for one more? But then you're still looking for a retracement at some point, right? Because you want to get your wave 4 in. So you end your 3, you get your 4, you get your 5. I mean, I would prefer a single impulse up like this, and then ending your 5, where if this 5 is there, that's fine. If the 5 comes later, that's fine. But this wave 5 is then going to be a lower degree 1, which I don't really enjoy. 1, 2, 1, 2, 3, because the second one now starts to be quite long. It's not invalidated. Preferably this 2 then moves back into this range below 118, but we'll see. We'll see. So, it's going to be another 1. It's going to be a 3. You look for a larger 4 and 5 in 1, 2, 3, 4, 5. Or, and that's this, you're going to get your C. What's the similarity between all of these scenarios? At some point, you're looking for that retracement to come. Now, that is at some point is fluffy, because we have to have a look at the local movements here. But I don't like to count this 1, 2, 1, 2, 3, and then 4, 5, 4, 5. I prefer the 1-2s to be in the bottom. Price moves out, and then you're working on your wave 4s and your wave 5s, and your wave 5s extend. Maybe that 5 here, 3, 4. You have a very short little 4, and then you get your 5. I mean, possible that you end soon here, and you get the weekend range is coming. You maybe take the high again, local 1, 2, 3, 4, 5. Then you start the weekend range, and then next week you get a bit of a retracement. So it's the story of 1-3C is that at some stage you're going to get that retracement range again, and the local information, of course, will give us more knowledge. But I'm not really looking at this moment for just straight continuation. I'll be happy if it does, and everyone here will be happy if it does. Just stick to your plan, don't FOMO if it does, and you're not part of a move. It's just from an Elliott Wave point of view, it's difficult to give the highest probabilities to this being a multi 1-2 here. 1, 2, 1, 2, and then get the 3. Or even a triple 1. If you want to say like 1, 2, 1, 2, 1, 2, you're just down 1, 2, 1, 2, 1, 1, and 3, and 4, 5, 4, 5. And I'm not counting it that way. It's just go back to the theory. It's not the highest probability structure to the upside. So I would prefer either a C to the upside here. If price continues up a little bit higher, we might consider an impulse, 1, 2, 3, 4, 5. But for this, as mentioned earlier, I do like to see 125.8K touched. Come on. There we go. Well, 120. Well, it's around 126. Maybe I just slightly missed the pivot, but 126. You really like to see that touched if you're looking for an impulse where this is a 3, you get a 4 and a 5. I'm not a big fan of a multi 1-2 here, even though it's not invalid. this second one is just very steep, and it's quite a bit longer than your wave one here. So for the bulls, I mean, arguably it would be better if this is 1, 2, get 3, 4, 5. So move to 126, then get a 4 and a 5, or continue to higher fib targets. That's fine. Wave 3s can extend further. But extending even further becomes a problem when counting this structure not as a 1, 2, 1, 2, 1, 2. And you need a very large 3 to go up, 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 up. You know, so I'm very aware of the ABC to the upside, where you get a very slow wave A, you get a deep B, almost 86, and you get a very sharp high volume wave C that acts like a bit of a fake out, which then bottom line continues the range for a longer period of time. While for the bulls, I would like to see continuation, like extend, which then brings me back to the 15-minute time frame, which is something I recommend everyone doing, which is what we do here on the channel all the time, is observe the ranges. Is this higher probability corrective or motive? You're in an uptrend. If the probabilities are higher, the range here is corrective, you're looking for continuation. And you just do this over and over and over and over. And that's how you can look for trades according to the trend. You wait for the range to prove itself. Is it corrective or motive? And then you look for opportunities in the continuation, like in the direction of continuation to the upside, which is something we of course do here all the time on the channel. Probabilities here were higher to move up, or at least in this range. Probabilities here, as mentioned at the beginning of the video. But also, I of course, like, you know, start the video here, but in Elite earlier this morning, I highlighted this is likely corrective, highest probabilities. We're looking for price to take out this high. So yeah, but here we are now. Let's have a look. So if we are looking for a wave 4 locally, 1, 2, if we look for 3, 4, and 5, we don't want the 618 to be touched. 121.5K, you don't like to see that touched for an impulse wave 4, and then get a 5 up. What's up, Legendario? How you doing, man? VE, today I'm taking more notes than I normally do. Tons of excellent information. Cheers, man. Talking about notes, for the ones that haven't actually seen it, we are working very hard on the final stages of the book. Our book is going to be completely designed, but our most limited edition, like highest quality book, linen cover, we want to have gold foil, like gold letters printed, like gold foil, preferably gold edges if possible, painted or like real, like the gold. But this is what the book probably looks like in the most limited edition we have, which is only going to be 15 copies. And then all the other books, the normal book is going to be like just fully designed. So a designer is currently working on the cover, the spine, and the back, as well as the internal design. And it will just have a full design. So not like navy blue linen cover, but just the book cover. You know, still the highest quality we can get in that stuff. But it's going to be fully designed. Only the most limited one is going to be the high, like this stuff. So we are currently working on it. And actually I've we already have our colors for the other books that we are still going to work on in the upcoming years. We already know the title of the future books. We already know the limited edition colors for those books. Of course, it takes years to develop. So, but we already have the colors. Plus, we even have a trilogy folder. Trilogy. Yeah. It's very, very exciting. One second. Yeah. little sneak peek. No, it's fine. That's what we're working on. It's gonna take years. This is only, again, the very, very limited style. So, yeah, exciting. But yeah, we're working hard, guys, on finishing it. So, when do we identify a leading diagonal? Is that a multi-one too? But when do we? So when price is creating a potential leading diagonal structure, you can count a leading diagonal as an alternative, but the multi-one two will have higher probabilities. Okay, so if price is moving up, wait, why I don't need to draw on my chart. Let me just go back. For example, here, I remember this vividly. So people here were counting like diagonals, and I had it as an alternative as well, because you got to be aware. And then, of course, in a diagonal, you're looking for 1, 2, you're somewhere like whatever. You need like a 3, 4, 5. I mean, something like diagonal. And then after wave 5, look for retracement and continuation. After a diagonal, you expect a deep retracement. Golden pocket, 786, 886, but not take out the low. That's one. Second, if you're looking for a corrective wave 2 in a diagonal 1 and 2, your wave 2 should be at least in ratio compared to your diagonal. Sure, wave 2s can be short, but not like this. No, you need a deeper, like larger structure, no? And then finally, when I remove the numbers, you can also count this as a multi-one two. And a multi-one two standard has higher probabilities than a leading diagonal. That's just probabilities of two structures being compared against one another. A leading diagonal is a pattern, and it can play out. However, a multi-one two has always the highest probabilities till proven otherwise. Now, when is a multi-one two invalidated? When you move below the latest wave 1. So in other words, generally, you're going to be looking like, hey, the moment we change the structure, that's a problem. As long as the structure persists, multi-one two has an opportunity, which means from a trading perspective, the stop loss is going to be below the latest wave 2. If you take the stop, you're likely looking at a diagonal. If it doesn't, you're very profitable because you're entering the wave 3. And then you ride the move, and then once you get into the wave 4s and 5s, you exit. And then you just wait for the retracement. Because, again, typical impulsive structure, K-waves, right? Elliott Wave simplified, K-wave. So we have the multi-one two stuff. You get the 3, you get the wave 4s and the wave 5s. And then you turn. Standard textbook stuff. We are actually creating a completely free 10-page or about 10-page PDF, fully designed with graphics and text and everything, very professional. It's even going to be checked by the editor and the designer as well. And this is free, no zero payment for that file, where we explain what I just said in a lot more detail for both trends and what to look for in ranges and how to decide directional bias. Are the probabilities higher for price to turn after a trend, or in a range? Are the probabilities higher to move up or move down? Because in the end, that's what you want to know. Are the probabilities higher to move up or down, take the high or take the low? And then you want to trade in that direction naturally. And that's what that whole file is about. And it's basically explaining K-waves, as we like to call it, because the Elliott Wave simplified methodology, as I initially named it, is something that we invented here on the channel. I have a whole video about it as well. And at some point, also in the comments, people were like, oh, you got to either, how do you call it? Like, not copyright it, but, just mark it. Or you can name it something. And then we said, then we just call it Koenswave. Because it's not Elliott Waves. It's very, 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 it's bare. It's all down to the roots. It's the most basic information on how can I say it? It's Elliott waves, but degraded to the absolute minimum that you need to know. And you don't even need to count. You don't need to use the numbers, the letters. You don't need anything of that. So because it's therefore pretty much a new way of approaching the chart, we call it K waves, which are Kunz waves. And it has different methodologies. It's about 10 pages. It's really, really cool stuff. And it will undoubtedly help you in observing the chart and knowing the directional bias. Are the probabilities higher to continue a trend or turn the trend? Are the probabilities higher to break out to the upside or the downside? And I give all types of different methods for you to use on the chart so you know the directional bias and you can trade in that direction. So we're working on that. Also quite exciting, actually. So it's probably going to be published when the book comes out as well, the compendium. What scenario on the 1 hour, 4 hour is the highest probability? Looking to eventually end an impulse to the upside. So an impulse has the highest probability. And yeah, I'm looking to like either end your 5 relatively soon, maybe locally here you get another 5-wave structure, 1, 2, 3, 4, 5, as long as you don't touch this 618 that you take from the low to the high. So the 618 at 121.5, you don't want to touch it. So that's still on. Alternatively, you might extend this 3 a little bit higher, therefore your 5, and do this, and then look for 4, 5, and then next week create your 5 and then get a retracement. It's at the moment what I'm personally looking for. So either or, because I don't enjoy counting this as like 1, 2, 1, 2, 3, 4, 5, 4, 5. I also don't like to count it 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 5. Weekend is coming, typically a ranging structure. So yeah, that's currently what I keep an eye on. We're also at the 886. And you can see price is hovering for a little moment here at the 886, which is exactly what we like to see. It's not all too common for price to just go straight through an 886 and take out the pivot that it's pulled from without at least providing a little bit of resistance. So, and the 886 is also explained in that free document. It's called the K8 principle, K8 principle. And there's more info to the to the 886. How much did it cost you to produce this book? Ooh, we are still finalizing the final things we want to add, because it's not just a book, but it's also all the extra stuff we give people with the book. So there's going to be an ebook, paperback, hardcover, and then we're planning 3 limited bundles. Might become 2, depends on a few things, but 3, 2. And with the limited bundles, it's not just the book, but it's extras as well that come with the book, which I will announce at a later stage. But it's really cool. Yeah. And the limited editions, if we do 3 bundles, it's going to be 100, 50, and 15. So 15 is the most limited. And I am at home here going to manually pack the bundles myself, put it together, and then ship it, because all the items, of course, like I'm going to be a mini distribution center. all the items and things that we add with the book in the limited edition stuff, of course I want everything to arrive nice in one box. And so yeah, and then the most like limited edition book, like 15 copies, is going to have something similar to this design. Linen, navy blue, very classic, very basic, while all the other versions, the other 2 bundles plus the normal paperback and hardcover, are going to have a fully designed cover. But the most limited book will have higher quality cover, gold foiling, gold edges, and like more things to the book, plus all of the extra stuff that we add to it. So we're still like looking at the different things we want to add to get a good idea. Like, I actually don't even know how much the book plus the extras cost. I do have a idea, and of course the book will be priced accordingly. It's a compendium. It's also not a textbook like Elliott Wave Principle. It's a compendium. So we compare it with compendiums in other industries, plus we check the cost of production on our end, of course, with all the editors and you know, all of that stuff. So yeah, but you know, it's gonna be really cool to get it out there. Can you add the timestamps? Oof, Yoshi. We did an analysis for a long time. I don't exactly know when I started my analysis, but I started with the weekly. Then I did some 4-hour stuff where I stuck around on the 4 for a long time. And then in between questions, we did a little bit of 1 hour. And I mean, the moment I'm going to stop streaming here, we're probably going to go for dinner, like out and about. So I can't really add them. Maybe tomorrow I'll have a look. Can we win the book? I could do giveaways, of course, once the book is out. The moment the book is going to be published, I at the moment, because again, we're in the final production phase, which takes my focus and energy and Jeroen's. So I haven't really thought too much about giveaways and stuff, but probably we're first going to publish it. And then I can always like print a few copies as giveaways or those type of things. But the initial launch is just going to be people can buy it or not. So, yeah. Of course, like I once the book is also online and on Amazon, people can see, of course, some of the pages that are inside and what's written in the compendium. But I do realize people like to see sometimes a little bit of a sneak peek, which I have sometimes given. So let me just quickly get you a sneak peek. Mm-hmm. Oop. This is one page. So that's also the reason why the book is going to be printed in A4. And this is, by the way, page 24 already. So and so only page 24 we start with the structures. Right? So we have a lot of stuff in the like. There's a lot of stuff going on. I think even Jeroen recently. Wait, I think Jeroen answered someone in Elite. Yeah. So Benji here was asking a question like about the compendium. Is it more diagrams or is it more text? And then Jeroen here said it's all the Elliott Wave structures, volume, fibs, rules, guidelines, subwave, channels, 886. Something I can't yet talk about. Okay, I should just go to the next one. There's something quite exciting that's going to be in the book as well. We have a little bit of history. We have we have a probabilities table as well in the book, so you can see in the blink of an eye which structure has higher probabilities than other structures. It's very practical. It's incredibly practical. So earlier today, some already heard it. I was talking with Prechter, who is the author of Elliott Wave Principle. So I had a meeting with Prechter, and the book of Prechter is, and we spoke about that as well. The book of Prechter is, it's the story, it's the calculation, it's the beginning of the theory. It really explains where Elliott Wave comes from, how you can apply it to the market. It's not incredibly technical with all of the details of an impulse and all the individual structures, but it gives you a great foundation. While the goal of the book that we create is to be next to this. So this is like the book you want to buy because it's like Elliott Wave Bible. It's where, you find the background, the story, the calculations, that sort of stuff. And then the practical book is the compendium. And that is where we then have all the graphics, the measurements, the fibs, the explanation on how to pull the stuff, the probabilities table, how to pull the channels, what channels are there, all the information about each individual structure, the volume, the targets, the guidelines, everything practical for a trader that is executing on TradingView or any other platform. That's what this is for. So then this gives you the background info and all of that stuff. And this, the compendium, little sneak peek, this is going to be the book that you'll have on your desk when you're in front of a chart and you're like, okay, I'm looking for an impulse. What do I pay attention to? You check the book, you check the chart, check the book, check the chart. And that's how you want to work with this book. Now it's going to be A4 sized like print or close to, because of we have so many graphics in the book that, of course, to make it easy to read, we just need a large we need large pages. So and this is only one page, but we have a lot of stuff in that book. So price here moving to the downside a little bit. Very, very nice. Very, very nice. The 886, man, it's something else. This I mean, if we do get that retracement, it fits with the analysis, so perfect. Anyway, the special edition also has the center fold of Dutchie too. maybe even more limited, only one of one. Koen started with the weekly fold by daily fold. Yeah, thanks guys. Odin, by the way, what's up, Odin? How you doing in Safaland, South Africa? Special edition for the mods. Where's maybe a Band-Aid? He's probably chilling on the beach, no? But wink, 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 wink. Yeah, Dutchie. Actually, by the way, Mark. So Dutchie is Mark. Agree with the question of Odin. How are you? Because you're not able to get in Discord anymore. So chatting has been slow, and of course we had a little bit of chatting on WhatsApp, but done with renovations, finishing touch, real estate agent was here last week for sale in 14 days. Are you going to move to Spain or to the south of Europe? Because that was like the dream, or get a van or something, right? And then travel around. Thanks for the live stream. Dropping out now. Cheers, Parth Pillai. Appreciate you being here. The alts. Yeah, I'll probably go with the alts soon again. So we're so busy with the compendium that in the morning is my content period. If I do Bitcoin, I generally focus on the compendium after. But I'll have some time for alts as well, like soon again. But not during this stream because I have to go soon for dinner. Thank you, Murat. Will there be posters? Actually, I haven't thought about it, but I don't know. Are you talking about a poster that has like one structure, or you mean like a poster that has all the structure so you can just put it on the wall and then quickly look at the wall and go back? Actually, that might be a great idea. We might as well put it's going to be quite a big poster though, because we can never fit all of the information of one structure in a small window. So either we need to leave out some of the info so we can have basic structures and basic info on the poster per structure, and people can put it on the wall. But if they want all of the detail, they open the book. We can have a combination. It's not a bad idea, actually. Not a bad idea. We need a desk mat. Yeah, like a mouse mat. Actually, Jeroen has been working on that a while ago a little bit. We never really finished it because the compendium just takes over. But bureau onderlegger. Ja, ik weet wat je bedoelt. Ja. Koen is AI. Do you already know the price of the book? We have an indication, but before we are able to finalize all the things we add with the different bundles and stuff, I can't give like an official like price. So the bundles are like ebook probably mid 2 digits, the paperback towards the end of the 2 digits, hardcover probably lower 3 digits, and then the limited bundles between like $200 and $1,000 depending on the bundle or something. So yeah, it's an estimation, like very rough. It's like 47.57, ebook, paperback 95-ish, hardcover 195-ish, I guess. It's gonna be like the thing, and then the limited starts at like 295 to like 995, depending on what. So yeah, it's a very very big project, very expensive project as well. But everyone should be able to, if they want to learn Elliott waves, we don't want to have a hardcover, like basic normal hardcover edition that goes into 4 digits. It's stupid. So we just compare pricing with other industries because it's a compendium. It's not a book, it's a compendium. We compare with other industries, plus we consider our operation operational costs with the designer and everything, the printing, the book, like the cost of printing a book and all the stuff we add. So we still need final conclusions. So I don't have too clear of a exact value. Yeah, still need to check it. Is that going to be Kindle? Yes. Yeah, ebook. I hope you've mentioned a special thanks to the Oracle. Nishid. You got a good memory. You've been here for a long time. People that don't know the Oracle, that's my wife. She knows how price moves. I don't know. She's always correct. What's up, Beerbit? How you doing, man? Poster. Okay. Yeah, I'm gonna... I'll wait. Let me write Jeroen here. Jeroen! He's probably chilling, as he should. I told him to enjoy his weekend earlier on a video call. He's been working so hard. Yo! I'm live. Okay, done. I send Jeroen is employee. I send him a message so that we will consider it. Yo, Dewald, man, how are you, sir? How are you? Proost. Baie dankie. Wait, Dewald, do you actually speak Afrikaans, or are you like fully native English? I don't really speak too much Afrikaans, but I can understand it. How do I get a limited edition book? I mean, we're just going to publish it. We will announce it. So we will, I will make sure that people know when it's going to come once we have the final date. So that, if people want to have limited edition stuff, they know exactly when it's going to be online and all of that stuff. It's going to be very limited. Main reason we have 3 limited editions with 150 and 15 copies. So 100 in the first bundle, 50 in the second, and 15 in the final one, which is the most extraordinary limited one. The reason we chose those numbers is it's very difficult to know what the interest is and how it's going to go. And the limited edition books, they first need to go to my house. They will be here in my place. So, and I don't want to have like 1,000 books in my house. But that's not like the reason why we don't have 1,000, 500 and 100. It's mainly because the YouTube channel is 21,000 people. Of course, the viewership is higher than 21,000, as you know, Daywald, as well, right? More people watch your video than subscribers are subbing to your content. So probably quite a lot of people know we're working on it, but I do think most of the people are going to buy a paperback because it's the most cost-effective one. The ones that want some more quality will go for the hardcover, and then we have the limited bundles. Those are the ones that really want something special, signed, and all of that stuff. With we will announce it at some stage. All the stuff that we add to those bundles, but it's very difficult to know what the interest is in those bundles and how to measure it. And because of the size of the channel, and I prefer having fewer limited ones, and just sell out and make sure that you know, like okay, cool, they're out, people happy. And then for the next book, we will then probably up the limited volume, or theoretically we could do a limited launch 2.0. So we open up, but I don't want to devalue the limited, you know, it's limited. It shouldn't be everyone has the limited book. So yeah, so it's just once we know the date, we're gonna put it online, and then we just launch everything at that moment in time. Yeah. And then the ebook, paperback, and hardcover are going to be on Amazon, and the limited bundles, we got to figure out where we're gonna sell them, because it's a little bit more tricky to go through Amazon, because the normal books, ebook, paperback, hardcover, are printed by Amazon, but the limited edition bundles are going to be printed at a third party because of the even Amazon quality. I mean, I have Amazon books behind me; they're great. Great quality, but the limited are going to be higher quality, plus we add stuff, etc., etc. So, and we can't do that like on Amazon. We can put the book on Amazon after it's printed somewhere else, but we have to figure out how it works with FBA and all that stuff. So yeah. I mean, as you can see, there's still stuff we're working on and considering. So it's you know, my website needs to be live as well. Fuck, man, it takes ages. I hope my website is going to be live before we launch, because then ideally I could just put the bundles on the website and I don't need to go to Shopify or and if my website is not yet online by the time the book comes out, we'll probably just put a Shopify website or something online and then do it through there for the time being, or I don't know, something like that. Probably at some point we're going to use Shopify anyway for merch, because I get questions about the caps and stuff, so might as well just start it, but preferably it's the website. I will see. Will it come with a Kun action figure or blow up doll? Maybe. Maybe. Never say never. Never say never. Post on Discord, that would be fantastic. Okay, it was the cheat sheet poster. Okay. Yeah, I mean, it's an interesting thing to consider, absolutely. Did Bitcoin touch the 618? I think it got close. But not yet. But it got close. But not yet. So we still need price to go down a little bit further. So the 618 is relevant because at that moment in time, you can't count this anymore as a 1, 2, 3, 4, 5. And then probably you're going to look for a finished structure here to the upside. So either this is your complete range and then this is the impulse up, which is then finished at the high, or you're going to consider diagonals where this is then ABC and this ABC is then part of a diagonal structure to end a structure, like an ending diagonal, which adds to the probabilities that I mentioned earlier. I speak both Afrikaans and English. Okay, that's cool. That's cool. Like if you speak Afrikaans, I can understand. Probably not when you write it. Oh, I'm not sure if you write it, I can read it, but at least if you speak it. Die naam klinkt maar bij Afrikaans. Odin is also from South Africa, as is my wife, by the way. So I am in South Africa, of course, regularly, but then I'm in Cape Town, not close to where you live, Dewald, unfortunately. But as mentioned last time, there is someone we know that lives where you live, so I'll hit you up if we will visit him. Oh, by the way, another thing, but not really what I'm looking for. If you touch the 618, of course, another option is that you look for a 1, 2, and then get a 3 after. But the weekend is coming. Markets are going to close in a couple of hours. So I'm not really looking for a 1, 2, 3. Depends on the bundle, Redas. It's between like 295 and 995. It's depending on the bundle. So the lowest bundle will probably be at the 295 range. The highest one probably at like the 99 or the 885. We are still finalizing the stuff, and yeah, it's really big. The bundles are very big. It's a lot of work. Like the compendium is a lot of work, and then we get to the bundles, and oh boy, man, like it's like making them really, really special with all sorts of customized stuff, numbering. You know, like yeah, it's a big one. What's the difference? We are planning 3 bundles. Bundle 1 and 2 are gonna have the same hardcover book, but what is added with it is gonna be different. At least bundle 2 will include what bundle 1 has, but more, right? More special things. I can't go into too much detail, but we'll get to that. So, but it's really cool, and you'll see why. Hopefully, why bundle 2 is significantly different soon. And then number 3 is a book that, so the normal paperback hardcover bundle 1, bundle 2, they all have the same design, same cover design. Bundle 3 has a different design, which is incredibly limited as the costs are very high. So the whole cover is going to be different. It's going to be with gold as well. That's the plan. And it's going to look probably something similar to the idea similar to this. Of course, this is ChatGPT. Quickly made it with chat, but that's because we were, talking. So complete like linen cover, gold foiling, gold edges on the pages. Of course, the pages itself are white, but the edges will be gold. Navy blue, some other stuff inside the book. And then besides this, it's going to be presented in a very different way with, again, very, very different extras that are included with the bundle. Yeah. What happens if we touch the 618? Actually, just covered, but if the 618 is touched, 1, 2, 3, 4, 5 is out because wave 4 should not touch the 618. It's very close. I mean, this is arguably already very deep for a wave 4, honestly. So, yeah, but the moment you touch it, you're not looking for an impulse 1, 2, 3, 4, 5, and then you're either like this is going to be either a wave 1, C, or 5. And basically, it means bulls 1, 2, and look for 3. I'm not really fancying that, knowing the weekend is coming up and where we are in the bigger scheme of things from the move up from 108 to where we are at the moment. So instead, what I would then like to count is do something like this, where for the bulls, we would have this, look for 4 and then 5, get a range in 4 and a final push in a 5, grab liquidity, all-time high, go down. Or alternatively, right, you do not take out that high. This is a finished impulse and you get a deeper retracement. So I really want one of that. Yeah, so that one is only going to be 15 pieces. Only 15. Oops. Whoa. Only 15 of the of that book. Only 15 prints. Like, yep. Very limited. Yes, exactly, Rajat. The limited bundles is going to be collector stuff. So we have big plans. This is only the first book of 3 books that we are planning to develop. And yeah. 886 Odin. The content is the same. Yes, the content is the same. Yes. I want a book that I can open and look at the chart, like the real chart, Bitcoin chart. I need a new one. Dutchie. Your hat is out. Oh shit, need to order a new one. Better not move too quick to a new house. Okay, guys, I think it's time to call it a night. So it's 2025, perfect time. We've spoken about a lot of stuff, and good time to Wait, I need the other button. There we go. A good time to end the live stream tonight. If you also give PDF format together with hard copies, I'm disabled guy, can't hold copies. Just yeah, we also have the ebook. So we have the ebook, which is the digital one, and we have paperback and a hard copy. But yeah, we have the ebook as well. So there's always going to be a digital version, absolutely. And Baris, respect to you, sir, and thanks for supporting here by watching the content as well. And yeah, we'll make sure there's always gonna be a digital version, 100%. Okay, have a great weekend. Thank you, Odin. Her sister is here, by the way, from South Africa as well. So fun times. They were shopping earlier. So I'm gonna see what the damage is. Yeah, very nice. So yo, everyone, have a great weekend. Enjoy whatever you're gonna do, and we will be back on Monday with content. See what we get. If price action is gonna do very crazy stuff that's not been covered here in the stream, or then I'll pop a live during the weekend. But usually I'm back on the Monday. But I will keep my eye on the chart. So that being said, have a great weekend, and I'll see you at the next one. Mm-hmm.